Hello, welcome to this video, and in this video I'll be explaining to you the part 2 of the MA crossover fire strategy. I'm Leke Kayode for Cosby Finance, and if you're new to this channel, I'd like you to subscribe, and also do not forget to click the bell button so that you can get notifications whenever we upload videos like this, because usually we upload videos twice in a week. So to get yourself abreast and not to miss all these exciting strategies, it's necessary that you click the bell button so that you get an alert whenever those videos are uploaded. So quickly jumping into my screen, being the part 2, and in the part 1 I explain the how to set up this strategy and the basics of what you're actually looking for. But in a recap, this red is your 13 EMA, then the yellow is your 50 EMA, then the white is your 200 EMA, then you have your stochastic indicator right here, which is your 933, and we want to look for buy signals whenever these indicators follow accordingly. That is, the red is above the yellow and the yellow is above the white, and we have an oversold condition here. That is a pullback that touches the 20 mark right here. So that is when we want to look at, or that's when we want to look at possible trades that we can take. So on the other hand, we want to, for the sell, you're looking for a situation like let me go back a bit. Okay, you're looking for situations like this, when the market, when the red is below the yellow and the yellow is below the white, and this pushes up to the upside, which is the overbought, then you enter the trade. So if you want to actually get the full explanation of how to source for trades, how to make use of this strategy, all you need to do is just to go over to my channel and just look for the part 1, and you will see the full explanation right there for you. So quickly, what we want to do here is just seeing how we could actually get a torque confirmation using the divergence. And the divergence that we'll be looking at specifically is the hidden divergence. If you want to have a good understanding of what divergence is, just go check my channel so you see a full-length video explaining to you what divergence is all about. So here, what we want to do is simple. What we just want to do is simple. We want to just spot divergence. After spotting our usual conditions, which is the sequential following of the MAs and the pullback through the stochastic, the next thing we want to do is simple. We want to look for an hidden divergence. And when you're looking for hidden divergence, basically hidden divergence is a divergence that tells you that the trend is continuing. Let's look at this scenario. You can see this an uptrend, a bullish trend, and here you can see we have our pullback. So the next thing, you want to draw a line. Let's assume that the market is actually here, so you want to draw a line to the previous pullback, which was here. So then you now join them to see if you have a divergence, like here. You can see that we don't have a divergence because this is moving up and this is moving up also. So you move to the next one. This is the next one. You can check if you have a divergence here. Okay, and you see, notice that we don't actually have a divergence. You can see they're both pointing upwards. We don't have a divergence. Okay, let's look at this other scenario. Let's look at this next one. Is the next pullback right here. Okay, so let's have a look at this. All right, so from here to here, yes. So now you can see there's a divergence, because you can see this is pushing up, then this is pushing down. You can see the previous ones, this was pushing up, and on the stochastic it was also pushing up. That isn't a divergence. So, but in this scenario, you can see it pushed up, and on the stochastic it pushed down. So this is a disparity in what the price is saying and what the indicator is saying. So therefore, that's why we have a push up, a reasonable push up above this previous high. This was the previous high. Yes, that's why we have this. So that's for an up signal. Okay, let's look at another scenario like this. This was the beginning of the trend, or I would say after a major pullback. You can see from here to here, then you notice from here to here also. You can see that from here to here, from here to here, you can see how we pushed up nice and easy without stress. So that's how it works. So this moves up, this moves down, then you can see the market pushed up. So this is an example of what we call a bullish hidden divergence, or bullish hidden divergence. So let's just move to the next one. Let's look for a downtrend scenario. Okay, this is an example of another uptrend, a bullish hidden divergence. You can see this and this, then boom, it pushed up. So you can actually go through your chart and just check for more examples. So let's look at a scenario of a bearish hidden divergence. All right, so you can look at this scenario. You can see this drop from here to here. Sorry, let's use this first. And this drop, and this is the corresponding level right here. You can see the divergence here between price and stochastic. The bearish, then it dropped. You can see the dropping. All right, so let's look at the next one. Okay, let's look at this level here and this level here. Okay, you notice that there is no divergence here because this is moving downwards and this is moving downwards, isn't it? All right, so let's look at another possible scenario. All right, so you can look at this. Let's look at this too. You can combine these two levels here and look at this, then you can look at this, the corresponding level on the stochastic. So you can see this divergence here. I see this is a divergence, this is a divergence. You can see, because why I skipped this one is because you notice that this dropped to this level, this dropped to this level between here and here, and this level here did not get to this level, and but on the stochastic it surpassed it. So this is a divergence. You can see that's why it dropped further. So you can actually go ahead and look at more examples for yourself and backtest this before actually going live. You can see that on this level sorry, excuse me, you can see that this and this level and this level pushed up on the stochastic. You can see that. Then you'll notice that on your chart, you notice that it's also pushed up. So this isn't the divergence, and this shows you that the market the downtrend is beginning to weaken. You can see that the market pushed up. So that's another clear signal of telling you that the market is weakening, the downtrend is weakening. So that's how you can actually make use of the hidden divergence to give you more confirmations on your trades. So if you actually enjoyed this video, I would like you to give it a thumbs up, and do not forget to also share with your friends. And if you're new to this channel, please also subscribe to this channel and click the bell button so you get notifications whenever videos like this are being uploaded. It is very essential that you're part of the community so that you don't miss important tutorials and strategies like this. So I remain your boy Leke Cosby Finance, and I'll see you in the next video. Bye for now.